Hello. Title of this week's video: Brokerage houses in panic. So basically, this week we had a situation where people, or traders, a lot of traders in one little chat room or website. 7 million members now. It's a private thing, and basically they realized that a bunch of hedge funds were massively short a GameStop, and at the time it was 150% short. And technically, you're not supposed to be of the 150% short of the outstanding shares, and technically, you're never supposed to be in that situation. So they all realized the situation, so they jumped on board. And plus, there was some new board members that came in from Chewy this week, so that was some news to help drive the news as well. And so they all came on board, all these traders buying up the shares, and these hedge funds were massively short, so they were forced to cover their shorts. It was a forced buy situation for them, which in turn caused back a feedback loop, which in turn saw the high volumes, so everybody in the stock market jumped on board, and it just kept going and going and going. And so, like I said, they were 150% short coming into all this mess, and so a stock that is relatively probably ultimately going would have been going out of business because the video game makers, they're switching over to streaming, bypassing their whole platform, GameStop's platform. So GameStop's in one of the situations like the video stores where the Netflix model is potentially destroying their business model. And so ultimately, the stock probably would have went to zero, and that's what the hedge funds were doing. And it's all legal for them to do that, is continue to short them and short them until they go out of business. And instead, it blew up on the hedge funds because of what happened. And so basically, a bad situation. Great for uh, GameStop, because now at these high valuations, GameStop can issue more shares for take in that cash flows. Hope if the demand for the stock continues to be high, and ultimately maybe pay off all their. They got $1 billion in debt. They could wipe out most of their debt because of this euphoria in their stock. And that's what I think is going to happen over the next few weeks. And they already had a bunch of shares which they could buy back, which they haven't disclosed yet. But I'd say they've already sold or issued a bunch of shares into the market which haven't been disclosed yet. And I still think they're going to issue even more to wipe out their debt at the traders' expense and ultimately clean up their books and not have that debt weighing on their balance sheet. So they're going to come out of this with a much higher valuation because the debt's gone. A lot of the debt will be wiped out by the trader's expense. So just something to think about going forward here. But some things to really, guys in the room think it's going to go to $1,000 a share. And until we can get this short float right here, it's 121% now. It was 150% when this all started. Until they can wipe out most of this short float, the price can continue to go higher and higher and higher as long as the volumes and demand remain there. And that's the big problem here going forward here. Look at this. You're at $325 a share. Uh, it was even higher this in the after hour session. I think it got up to $540 a share. Maybe this is the top, maybe it isn't. Some of the guys in the room think because that short float is still there and they keep continuing to buy into the short side. And if they continue to do that, this thing they seem to think could go to $1,000 a share. I don't know. I don't trade like this, but it's something to think about going forward here. But it caused a sure on panic in the brokerage houses because of the volatility in those stocks and a bunch of brand new uh, 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 traders in that situation. They were not prepared for the massive volatility that everybody from their, especially Robinhood traders, they didn't expect that level of volatility in their members' accounts. And bottom line is, if these traders blow up their accounts, the brokerage house is on the hook for the difference between their account balance and how much they have to clear out what's owed to the NYSE. And so they were having a liquidity issue as some of these accounts were getting blown up during all this high volatility. And then they also were having uh, a risk crisis because they have to maintain so much cash on hand to cover the outstanding risk. And when them going with these high volatility, too many of their members were all going into this high volatility, and it wasn't in our business model for such a mass uh, movement. They didn't have it properly figured into their risk assessments, in my opinion. And so they had like Friday, Robinhood had to go out to 6 different banks and gain cash to shore up their balance sheet. So that was just one, and I think this is happening in many brokerage houses. And that Robinhood was the one that was really being highlighted in what was going on, and it was causing a crisis in the markets because all these brokerage houses were having to draw away from the high flyer names like your Facebooks, your Amazon, your Microsoft, your Netflix, your Tesla, all these higher flyer names that had been going on for years now. They were having to sell these equities to make sure that they could cover the SEC requirements for their funding needs. And I think that's what's caused a lot of the turmoil that we saw into last week. Okay, that's basically how I explain that. Okay, I'm going to start with ESs. That's your S&P 500, your futures contracts, and basically we have a parabolic. What could very easily be a head on a head and shoulder stop. This right here, being the head area, and this be the left shoulder. So this could very easily be a head for a head and shoulder stop. So we're going into this next week in that situation. Okay, basically, we got this channel we've been trading here, main channel on the ESs here, and then we've been going in a very, very tight range since the inauguration to the upside. Okay, and now all of a sudden volatility is starting to explode here in since the inauguration run up. This is definitely something I'm looking at here. The volatility explosion because we've been in this really tight range since that inauguration run up here. So definitely something to think about here going forward. And going down here into lower time frame here, so you can see what I'm looking at here on the ESs. So basically, we are breaking down here in this lower channel. We have come down here before. We have sold off hard way back in the middle of December, and we're back down here again. Okay, so definitely something to look at going forward here. And volatility is exploding. It seems like here we're not. It's not the end of the world yet, but it's something to think about. I still think we have a target for Monday, the 36.6320. This is an untested low, so that's what I'm looking for. We're going to be gapping down Monday, going forward here, and this thing could get extremely bad. You know, if there's more news, bad news to drive us lower. Okay, another chart I want. Lawrence McDonald posted this on Twitter, and he was talking about that since 2017, that the VIX or 2008. Yeah, it's 2008. That's what it was. No, yeah, 2008. So back during the height of the crisis. Okay, uh, we have not seen a January with a volatile, right after the crisis. I mean, we have not seen a January with volatility over 30. And here we are close. We closed January. Volatility was at 32.85. So just something to think about going forward here. That volatility is really spiking here. We are right here in backwardation, uh, going into to start February, and that can be very. This was a dangerous signal that we were in for last year, but now we are in what could be a very dangerous, turbulent time going forward here. So definitely one of the charts I wanted to share with you guys on volatility going forward here. Okay, one other way I want to look at SPY here, and this actually says a lot about what was going on in the markets. I have a little line on here, and this is the RSP. This is the equal weighted S&P 500. So this is a good breadth indicator. And anytime you see a sell-off that leads the RSP, that gives you an indication that there is a major weighting of the market, just a few stocks, which in our case, basically you got 6 stocks. You got your Microsoft, Apple, Amazon, Google, Facebook, and Tesla. Those 6 stocks are pretty much ruling the markets right now. So because of their high market cap, and so when they sell off, they will lead the RSP to the downside, and that's exactly what we saw. The big techs, or the big heavyweights in the market were selling off, and that was causing a faster decline in the markets here, and that was just caused by a liquidity issue, I think, by the brokerage houses. So something to think about going forward here. But we knew that there's been rotation coming out of those names for the past several weeks during this quarter, especially with Microsoft, basically, and Amazon. Look at Amazon stalling out here. Basically, big money is slowly but surely been taking money out of these names, and they've been rotating them into the IWM and the Russell 2000, small caps, mid caps, all since the inauguration. There's been a major move into the financials, move into the industrials, and a move in energy. And like I said, so basically the areas that have been underperforming have all of a sudden got an explosive inflow of capital, and some of that capital has been coming out of the technology and the megatechs, and we're seeing that playing out in the sell-off here as well. This here just gives you some idea just how parabolic the technology sector has been. This is just obscene, just how much money and everything has been going into the sector. And you just see how parabolic this is. Technically, we could come all the way back down here, below the 96.73 here. So, that's, you're looking at a 30-40% decline for our next support area on technology. If this gives you some idea just how blown off topish we are here on technology. So just something to think about going forward here. And, these parabolic moves tend to not end well. And so definitely something to think about going forward in your trading. So we did get our first early sign here on the NQs of some troubles here. We've been in this really tight trading channel, and we actually broke out of that Friday. And even when they tried to rally into the close, the NQs couldn't even, they weren't even catching a bid to bring it back up into to touch tag that channel, in my opinion. So I was watching that, and that was a really bearish signal to me. That's why I really leaning to think that they're going to continue to sell this off. There was just no money coming into technology as of Friday afternoon, which that could all change. But yeah, it was looking really bad. So basically, I'm actually, my next level down here would be, so would that be a mini Head and Shoulders if we were to come all the way down to here, this level, the 12,655 area. That would be my next level. And it's hard telling just how deep of a Head and Shoulders top uh, they're trying to potentially put in here. But ultimately, down here is your target. Uh, Basic 11,604. And if you go out in a longer time frame, it looks like on that chart, it looks like a really big move, but it really isn't. You know, right down here, this is your left shoulder. That would be your head, and this would be your right shoulder down at this level, right through here. So ultimately, this is what I'm thinking here. We are coming all the way down here to the, like I said, 11,592 if this thing catches some steam here. So you're looking almost a 2,000 point drop. So yeah, just keep that in mind here going forward. Almost a 2,000 point drop on the NQs. That could be quite significant. That's what, a 20-25% drop on the indice. If this proves to be, this looks this truly looks like a head based on my charting and stuff. This got rejected. This got rejected. This got rejected. I mean, this up here just truly looks like a head area for this market, yeah, for the NQs. I think it's going to come crashing down, probably even Monday, all the way, and this bear markets tend to be violent, so we could have this crash all the way down here, quite possibly this week. So this could be quite an epic move, but I don't want to say for sure because the Fed is backstopping so many things. They're probably going to come out with talk on stimulus this week and everything like that. So, but this is definitely a scenario you have to be aware of going forward. Okay, IWM looks like a blow off top. Looks like we got a full on blow off top scenario here. So I think this week we're coming right back inside this channel. Don't know how deep it's going to come. This is going to be our left shoulder. This looks like just a parabolic blow off top scenario possibly here, because all that new money came in since the election. So we have a very short time frame here that this new money has hit the Russell here. So just keep that in mind. This thing can come crashing down even faster than the other areas. So I do want to point that out there for you guys who are trading. Okay, this is very important. The financials. The financials have been a backbone of the Russell going higher. Not necessarily the XLF, but I do want to exemplify what's happened since the inauguration. Okay, excuse me. Since the inauguration, we've had these gaps right here. I think the financials are coming in and they're going to fill these gaps. Here in the next week or two, here in the not so distant future. So that is a definite scenario that I do want to point out here, that we might be filling these gaps in a very short time frame on our financials. And if you look at CRE, that is your regional banks. That's what's gotten really the lift from the whole uh, since the inauguration. And look at how many gaps we've got below us here on this move up. So if you come back to before the inauguration, we were right down through this area. Well, let's see here. When was it? 11. Yeah. Here's where the gap started, right here. So every one of these gaps on regional banks have happened since the presidential, since we, not the inauguration, since the vote, since we had our elections. This is the entire move here, and look at the gaps. We have zero volume profile supporting in any of these gaps. So this is, to me, the absolute most precarious chart going forward here in a market sell-off scenario. I think the regional banks are a screaming short going here. If you think there's a bearish sentiment in the markets, the regional banks just look extremely precarious going forward here, in my opinion. Another area, XLE, rocketed higher. We have virtually every country in Europe shutting down their borders right now, and XLE has gotten this, massive lift since the inauguration. Look at these gaps. That's another one. It was a election gap scenario. I think it's coming back in, so definitely keep this one on your watch as well. XLK. No, I don't want to do that one. XLI is another one. XLI Industrials. They've been rallying since the inauguration as well. Definitely some. We got some gas below us here on that. Looks like it's breaking down. Okay. definitely something to keep on watch. That's your, like I said, XLI is your industrials. And let's see here, XLB materials. Okay, I don't have, yeah, I do have the gaps. Another one, your material sector, thinking the industrials were doing going to do real well. They have rallied real hard. All these chart patterns look like they're breaking, in my opinion. Okay. And then XLK, that is your technology where money has been starting to rotate out. This is the strongest sector in the markets. We've had fairly decent numbers in the markets, but we are starting to see a little more. They haven't actually broke yet. This thing starts breaking, and man, I tell you, the markets are really going to get in trouble. So we do have Google and Amazon reporting Tuesday, but so far they are selling into the numbers, and so definitely something to think about going forward. Amazon should blow out numbers, but you know what? Apple had blowout numbers. They got punished, and Microsoft had great numbers. They're still getting punished. At least the rate of sell off in Microsoft has been lower than some of the other areas in the market, but definitely something to keep on watch here. We haven't quite broke yet, but this is something we do want to keep on watch going forward here. And then we had XLV. We had good. Okay, they're holding in pretty well, with the whole COVID names and stuff, all the COVID news. Your healthcare stocks are holding in there so far, and XLU. Okay, and our utilities are holding in like a champ. Typically in a in a true bear market, your utilities will uh, fall less. They're not necessarily going to rally in a more a correction, market correction, but they will hold value. Investors will rotate into XLU to for at least a dividend than to be in the more riskier areas of the market. So definitely some things to be watching here. EEM is another one you got to worry about. We have an island reversal on your emerging markets. This is an island top reversal signal. Very risky area of the markets. Um, looks like some money coming out of this sector. We do have Alibaba reporting this week, so that could help support your emerging markets. Uh, EWU, like I said, most of Europe is shut down here. It does look like we're showing some relative weakness here in our United Kingdom. So we got to keep an eye on these European stocks. Everything being shut down, it could have a profound impact on. So far, the trends are not horrible yet, but we got to definitely keep that's your Germany, and here is your France. France looks like it's breaking down. All their borders are shut down, so this would be your leading indicator going in as far as Europe goes, in my opinion. So that just gives you some ideas here. We are starting a new month on critical support levels, not necessarily, and we have a very heightened VIX to start the month as well. So definitely a very coming out of a very parabolic situation in the markets. Okay, another trend that I do want to point out here. Uh, so as far as billions of dollars ago, with that Reddit site, they targeted silver. That was one of the posts in the site with all those millions of people in there. And man, come Friday, they more than doubled the old record in 15 year this 15-year-old chart on volume. Their money flows, fund flows. So they more than doubled the old record on this fund in silver just Friday. Okay, so I do want to point this out here. There is a major, this might be the next one that are trying to target silver, and huge money flows coming into this fund based on the silver itself didn't do that well. It's SI for the ticker, and as you can see, silver didn't really go anywhere, but the money flows into silver were huge. uh, the ETF itself. So basically, the ETF, just because a lot of money is going in there, the ETF moves based on um the underlying commodity, and the SI actually tracks the commodity itself. And so there were huge, huge funds thinking that silver is going to explode going into this year. So something definitely you want to watch as money flows are coming into a sector. And great big banks have been keeping this thing under wraps for years. But all the new technology and energy, this efficient energy and stuff, it's all going to drive silver prices higher going into this year. So something to definitely think about. The money flows are going. I don't know if it's short lived or not, but there's huge money flows going into the silver going forward here with all the EV stuff. And so definitely something to think about going forward. One other thing I want to point out here, we still got 18 days left in this active contract, and we are in backwardation. The current contract is the highest VIX reading. So they're not really, like when you go into backwardation, they're not predicting a major upflow in the volatility long term. This does look like a shorter term situation. So, but we are above 30, even on the longer dated here. So, anytime you're above uh, 28, I think, yeah, 28 and above, somewhere around there, is 2% expected moves on the S&Ps, up or down. So we're going into a very high volatile markets, and typically when you get 2% potential moves in the markets, a lot of times that means it's a total risk off. And a lot of traders, the volatility to the downside is magnified in those situations, especially when we're coming off a parabolic move higher. Okay, guys, to finish my video, some of the stocks that we're looking at going into next week. AMC is one of the targeted Reddit stocks. It's reporting next week, and that's why the volumes are off the chart. So definitely keep that in mind going forward here. We do, like I said, Ford, Pfizer, ExxonMobil, Snapchat, Alibaba, BP, British Petroleum, Gilead, Pinterest, eBay, PayPal, Qualcomm, Activision Blizzard, UPS, Amazon, Pin Gaming, FireEye, Electronic Arts, Google, Clorox, Yum Brands, Spotify, Cummins, Ralph Lauren, Bristol Myers, and Chipotle Grill. Those are some of the top ones that I have. There might be more, but yeah, definitely some big players hitting the market next week or this week, this coming week. Okay. So basically, good luck, guys. Like the video if you like it. And like I said last week, I was a little bit more bullish because we do have the stimulus. We'd have close to $4 trillion potentially hitting the markets. But in the short term, it looks like they want to do some profit taking, and rightfully so. And that's what I'm thinking here. I'm not thinking we're going to have Armageddon on the correction. I do think we're going to have a nice little correction here in the short term, and that'd be a nice buying opportunity for a possible uh, consolidation sideways or new all-time highs. With that kind of money coming into the markets, good chance new all-time highs.